You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310 and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN E-Mini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Monday, 22nd day of March, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show. You'll also have access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of your office, away from your desktop, not to worry. Point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show. As it unfolds, you just won't have access to the chat box. We also stream live during this broadcast on our YouTube channel, youtube.com/CFRN. We archive each and every daily show there as well. If you miss a daily broadcast and you want to catch up, all you got to do is head to the YouTube channel, youtube.com/CFRN. And if you're new to these parts, you can go back a week, go back a month, go back a year, go back a couple years, and listen to a broadcast. Now, the prices that we discuss on that day will be relative to whatever prices were happening on that given day. But all of the language, the indicators, the strategy, the underlying principles of our methodology, nothing changes from day to day to week to week to year. If it's not broke, they say leave it alone. So basically that's what we do. We leave it alone. Let's open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, and for your grace. As we gather here in the harbor of your safety, we thank you for fellowship. We thank you for family. We ask that you would strengthen us, restore us, and inspire us with your love. Fill us with your peace so that as we journey onward, we would pour out your love and grace to everyone we come in contact with. We ask that our souls would catch the wind of your Spirit so that we would be able to take your promises to the ends of the earth. In Jesus' name we pray. Amen. Okay, happy Monday. Hope you had a great weekend. Spent quality time with your family. Church was good yesterday. Hope you enjoyed it. All right, numbers from around the world. Cash markets, indices. In the U.S., the Dow is up 51 points. Dow was negative earlier, but now we're up 51 points. The NASDAQ is up 179 points. That's a little over 1.25%. S&P 500 is up 27, but our man in the street, the Russell, is down 20 points. Now, that's almost 1%. The Russell 2000, that is 2,000 small cap companies, as opposed to the S&P 500, which is 500 large cap companies. And I call the Russell the man in the street because sometimes the small cap companies can be closer to the heartbeat of what's really happening on Wall Street. The S&P 500, sometimes they get lost up in their ivory towers. But the Russell 2000, it can be a barometer. It's not a leading indicator. It's not the one that always moves first. There is no one index that always moves first. However, over time, we've learned that the four major indices, the Dow, the NASDAQ, the S&P, the Russell, they tend to trade as a pack. In other words, if one's green, they're all green, one red, they're all red. But over the last few weeks, we've been pointing out this divergence in that. And again, here it is today. S&P 500 up 27 points. Russell 2000 down 20 points. In the commodity basket, crude oil down a penny, trading 61.41 last. Gold down $4.90, trading 17.36.80 last. Silver down 58 cents, trading 25.74 last. Now that's a drop of silver over 2%, almost 2.25%. A reminder, when silver moves $1 in price, from $25 to $26, if you're holding a large futures contract, that's worth $5 grand. $1 of movement is equivalent to $5 grand. Now the pendulum swings both ways. Silver is very volatile. Margins are high, so you got to be careful. But with silver down 58 cents, it just went 55 cents. Okay. If a $1 move is $5 grand, then a 50-cent move is $2,500. And currently, silver down 55 cents on the day. In the Asian markets at the close, Nikkei down 617, 2%. Shanghai up 38, 1%. The Hang Seng down 105. And in the European markets at the close, FTSE up 18, DAX up 37, the CAC down 26. No movers, no shakers. So that gives us a mixed day in Asia, mixed day in the UK, and because of the Russell, and only the Russell, it's a mixed Radio Monday here in the US of A. And Michael, was that you I hear in the background?
That is me.
Oh, good.
That is me.
Got your internet
Yep.
back. Fantastic.
Good.
Okay, doke. So Michael's going to take over now. He's going to do a recap of everything that happened this morning in the live training room. And then I'll be back and we'll take a look at the concierge alerts, the Logic 247 alerts, all that, and answers to your questions. And if you have questions for Michael, type them in the chat box. He'll be happy to answer them for you.
I will be. Indeed. Yeah, sorry about that this morning. It actually took like, I don't know, 15 minutes or so for it to come back up.
Was it a weather-related thing or just a thing?
No, God, no. It's a beautiful day here today. I don't know what it was. It just stopped. You know, Jada was in the middle of a meeting too, and her meeting ended. My meeting ended, and
Sometimes
it came back up for like 1 second, and well, it was more than a second. It was like 2 or 3 seconds, and then it went off again, and then it came back up, and it stayed up.
Good.
But
Good.
Anyway, we seem to be good right now.
Alrighty, well, I'll hit mute, and it's all yours.
Okay, here we go. Good afternoon, everyone. Today is Monday, the 22nd day of March 2021. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at cfrn.net. Scroll down to where it says free 5-day trial, no credit card required. Click on that and you'll be brought to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. And you can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click that link, we don't know that you took the free trial. So you have to click that link. All right. All right. Now, the spreadsheet. Now, today was kind of a messed up day. We were having kind of a rough day to begin with. I mean, we got the goal for the day pretty early, but the markets were just not all that forgiving today. So we had, today we were up $350 a contract, and that was after one trade. When I lost power, I'll get into this. Well, I'll just get into it, when I get to it. Let me go through the spreadsheet with you. Again, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Hold on. Yeah, here we go. Today, as I said, is the 22nd day of March, 2021. Made 5 ticks in crude, 40 ticks in gold, and we lost 8 ticks on the ES. Put us up at plus 350 on the morning session. Today, it took 12 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract and took a total of 17 trades. So on the month now, we're at $15,992 a contract. That's over 16 trading days, averaging $999 per contract per 2-hour trading day. Now, let me just check and make sure that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 13, 14, 15, 16. Okay, I just want to make sure the 16 was right. Okay, so we've now hit our goal for the day on 53. We've now hit our goal, not hidden. We've now hit our goal for the day on 53 out of 54 days. And on the year now, we're at $47,477. That's over 54 trading days, averaging $879 per contract per 2-hour trading day. Okay, let's get into what happened. Start out with the ES today. Okay, we didn't have a whole lot going on with the ES, and I'm waiting for everything to catch up here. There we go. All right. So our first trade was right here on the ES. On this trade, we picked up 8 ticks. We had suggested it was going to get up here and then up here, and it went to both of those. Came back down toward the weekly trading zone, didn't actually hit it right there. Moved back up. We had a long trade right in here. We stopped out on that, put us back to break even. Then we had a whole bunch of chop, and we started to break out of the chop. And I stopped out right here. That put us down to -8 on the morning session. Now this I highlighted after the fact because Tom had asked me a question about it. This was an actual trade that I had missed. The only thing I would have had, the only question I would have had is, are we in chop or not? But everything suggested that it was a good long trade going up to the weekly trading zone. After that, there was really nothing on the ES. Okay, really nothing to take on the ES. Crude oil, we took, Dwayne, that's what I was going to get into. Dwayne's question was, what happens if you're in a trading and lose power? Because I was in 2 trades, as a matter of fact. Well, I wasn't in 2 trades. I was in 1 trade and I had an order on for another trade. So I'll get into that right now, as a matter of fact, on crude. All right, so let's get back to the beginning here on crude, okay? Right here, our first trade on crude, we picked up 4 ticks. Our second trade on crude, well, it looks like we had a break even right there. Yeah, the first trade on crude, we picked up 4 ticks. The second trade, we had a break even. Then I was drawing a whole bunch of lines in here. It looks like then our third trade, we picked up 10 ticks to put us at +14. Then somewhere in here, we picked up a little bit right there. Doesn't look like I took that into account. Oh no, I'm sorry, I'm looking at the wrong one. Okay, I'm looking at the wrong one. Let's start from the beginning. Our first trade, we picked up 6 ticks. Then we had a break even. Then we picked up 4 ticks to put us at +10. Then we picked up 3 ticks to put us at +13. Then right here we had a break even, and this is where I lost power. Was right in here is where I lost power. Okay, all the way till about right here. Now, when I lost power, I didn't realize I had left an order on here, because this was not an order that I would have placed, but I had left an order on here, and it may have been a stop left from one of these trades that I had put on. But nevertheless, it was an order right here, and that order triggered. Now, when orders trigger, they automatically trigger with a stop on them. And so the stop, once everything is triggered, everything is triggered on the server side, not just on the client side. It's triggered on the server side as well. So my stop was automatically put on. I did actually stop out of that trade. And that was all while I lost power. The power came back on for just a couple of seconds, and I didn't notice it because I was trying to restart everything. And then it went off again. But I had that trade waiting on the server side, and it triggered my stop, and so it stopped me out -8 ticks. Now during the break, there was some pretty good movement here on the crude. There was a nice YBR trade right here. It would have been a trend line trade from right here for the short. There was another shot there, and all the way over to here to take advantage of the down move right there in crude. Now let's go to gold, because I was also in the trade in gold. I was actively in the trade in gold at the time, and I was short from over here, and it was going through all this chop right here, and then the power went out, and this is where it came back on for just a few seconds, and I didn't have a target on it, because these were my target areas right here, but I didn't actually put a target on the trade. But as soon as I saw that I had power again for a few seconds, I got out of the trade as soon as I could, and I was at +20 ticks right there. But leading up to that, leading up to that, in here, our first trade on gold was +4 ticks. Then we had a break even. Then we had +10 ticks. That put us at +14. Then we stopped out. That put us at +14. It should have put us at +6, but it put me at +5. I have. And then I picked up 4 ticks to put us at +9. Then 5 ticks to put us at plus 14. Then 6 ticks to put us at plus 20. Then a break even, and then 20 ticks to put us at plus 40. And that is where we ended the morning session. This was all during the break, and there was really nothing there during the break. Okay, so it was kind of a mixed up morning session with me losing power right in the middle of everything. And yeah, and so something else just triggered that I had put on way back here. This was my target area from, I think, this trade way back here. And I never took that off. And that target area was a sell from way back here. I think I actually put it on here. And when I got out of here with a little bit of profit, I left that on. It came back here and then went up there. And it actually just triggered me short because I left that order on too. And it triggered me short up here. And I'm short right now. See? So I'm going to get out of that trade right now because it is not a good shorting situation. Well, it actually hit there and it's probably going to go down from here, but the charts aren't saying it's going to go down. I do think it's going to go down. I think it's going to go down to 37.4, but the charts aren't saying that right now. So anyway, it was a little mixed up morning for me because I lost power, or not power, I lost the internet. But we'll get back here to the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 22nd day of March, 2021. Made 5 ticks in crude, 40 ticks in gold. We lost 8 ticks on the ES, put us at plus 350 on the morning session. If you take out those 2 trades where I lost power, we would be plus 190, I think is where it would come out to. Today it took 12 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 17 trades. So on the month, now we're at $15,992. That's over 16 trading days, averaging $997 per contract per 2-hour trading day. We've now gone 53 out of 54 possible days of getting our goal this year. And on the year now, we're at $47,477. That's over 54 trading days, averaging $879 per contract per 2-hour trading day. Dwayne, you and I have to schedule a time to get together so I can look at your stuff. I know we tried it last week and I waited and waited and waited. We just got to take another shot at it. Schedule a meeting, okay? All right, so if you have not taken a free trial yet, go to the homepage at cfrn.net. Talking to Dwayne N, not Dwayne R. Go to the homepage at cfrn.net. Scroll down to where it says free 5-day trial, no credit card required. Click on that. Then right here it says eminitrainingschool.com. All we ask for is your name, your email, and your phone number. You can tell us the biggest training channel so we can tailor one-on-one training just for you. Hit the send button. You'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, you don't get the free trial. All right, because we don't know that you took the free trial until you click that link. All right. All right. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am. Recap of the recap.
Today it took 12 minutes and 3 trades to get to $100 per contract.
Good job.
Thank you.
Good job. It was a quiet Sunday night out on the Globex overnight session. And the recap of all that's happened since the markets opened at 6 p.m. Eastern last night. We're in week 138 of Logic 247. Since the markets opened last night at 6 p.m. Eastern, we've issued 16 alerts. 1 never triggered, still waiting on 5. That gave us 10 actionable alerts. 10% stopped out. That's 1 so far, based on not risking more than $300 per contract per trade, less when possible, based on market structure and a simple 3-step method that we teach all of our traders. In the live training room, where Michael is teaching you the methodology and the strategy every day for 2 hours, You're asking questions, he's trading, he's answering your questions. He teaches you to use a hard stop on every trade. For simplicity's sake, in the live training room, it's an 8-tick hard stop across the board on everything, every market, every trade. What he's really trying to get across to you is that you have to have a physical hard stop on every trade. Now, the alerts themselves are based off of a 30-minute chart, and we assess each individual alert to determine where the proper stop loss needs to be. We ask the chart a couple questions, and the chart answers, and then the chart shows us where the stop needs to be. Again, we don't want to risk more than $300 per contract per trade, but also we want to risk less when possible if market structure allows us. Now, on those rare alerts where there's only 2 points available, then you have to find an entry where you only risk 2 points, an entry and a stop. You can never risk more than the potential profit in the trade. Most alerts will have an initial target, which gets you to that $100 per contract per day, whether it's the S&P or the Dow or the Russell, the NQ. The NQ actually is $200, the initial target. And then there'll be, on a long trade, potential resistance, which is target 2, target 3. And then the final trade 2 target on a long alert is always the weekly zone above, and on a short alert, it's always the weekly zone below. So let's just take a quick look at those alerts from last night. Some Sunday nights are really busy. Last night wasn't one of them. It was kind of quiet. Last week, which was week 137, we had a total of 68 alerts. 11 never triggered, 1 carried over. We had 56 actionable alerts. 13% stopped out, or 7, based on that $300 maximum risk profile. Okay, that's the entire week from Sunday night, last Sunday night at 6 p.m. Eastern to this past Friday afternoon at 5 p.m. Eastern. And then last night began week 138. This was the carryover. It's crude. And then the first alert coming out of the gate last night was to be short the S&P, 38.87 down to 38.85. That was a weekly trading zone. Okay, now it went exactly to 38.85. Oh, what this means here is that if you were at the head of the line when it hit 38.85, then you probably triggered. Okay, to guarantee a fill at 38.84, price has to trade 38.84. But at the time Valerie came through to do the recap, okay, it had only dropped to 38.85, so it did drop 2 points. This is one of those situations where you can't risk more than, if this is worth $100 per contract, you can't risk more than $100 per contract. And using market structure in the 3-step process, if you can't find an acceptable place to put your stop loss, then you just pass and wait for the next alert. Important prices, important areas are almost always tested, so once an alert triggers, there's a higher probability of it triggering multiple times than not triggering multiple times. Then we had a short on the Dow. The way you read it, this is alert number 6,919. This is the June contract of the Dow Emini. The idea was to sell 32,370. Initial target 32,350. Second target 32,320. And then 32,160. And then the weekly trading zone below was 32,140/145. Sunday nights we use the previous week's weekly trading zones, because the weekly trading zones, WTZ, those are published Monday morning at 6:15 a.m. Eastern for our members. Now, we have published these since December 14th of 2009. You should think of them as fixed support and resistance. The indicators provide you with dynamic support and resistance, but the weekly zones, once they're published Monday morning, that number is carved in stone. They don't change. We don't massage them, manipulate them. Once they're published, that's it for the week. Now, I just got a pop-up that says I may be experiencing network connection difficulties. So, somebody type in the chat box if you can still hear me.
I can still hear you, Dwayne.
Can you? Okay. All right. I just didn't know. Sometimes when it says that.
Yeah, no, that's what it said to me. I mean, that pops up, and then you get the other thing that says reconnecting.
Oh, yeah, it popped up on yours too?
No, I mean, that's earlier today when I lost my internet. That's what happened.
Okay, then we had a short on the Russell, number 6,920. To be short, 2260. Initial target, 58. Potential support, or target number 2, 2248. 2240. On down. And we were below the lowest weekly trading zone on the Russell, so that's why there's no WTZ there. Short on the NQ never triggered. This hedge on crude never triggered. We're still waiting on the results. We haven't written that one off yet. Then we had a short on silver. And then a hedge on the NQ to be long 12,944 to 1254. The initial target on the NQ is $200 per contract. And then second target, third target, fourth target, final trade 2 target. Long on gold stopped out. Short on gold did the deal. And then this is a short on the S&P. And then now that was all Sunday night, but that was a quiet Sunday night compared to some Sunday nights we see. Here's crude, still waiting. Long on the S&P, still waiting. Long on the NQ, short on silver. And so that covers all of Logic 247 since the market opened last night. Now, Logic 247 has a companion. The companion is called the Concierge Trade Alerts. This was actually our original alerts. Now, where the Logic alerts are based on current price action and they come out around the clock, could be 2 a.m. or 2 p.m. It's just whenever opportunity presents itself. So if you're ready to go to bed, then you should turn notifications off on Telegram so that it doesn't keep you up all night on a busy night. And then in the morning when you open Telegram, any alerts that came out while you were sleeping, they're right there. And if it's already triggered, that's okay, because once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. These are not based on current price action. These are based on historical price action. This serves as forward guidance for the entire session. So once this report is published shortly after the Globex open last night, it was 20 minutes after the open, if price starts trending up towards 39.37, that's bullish, and so you would use the logic alerts and or your understanding of our methodology and strategy to look for long opportunities. Once we get above 39.37, we're definitely only looking for long opportunities. And then the short side, if price were to start, after I publish this, if price starts dropping to 38.70, that's bearish. So we'd be looking for shorting opportunities in Logic 247. And then once we get below 38.70, we're definitely only looking for short trades. So the best way to handle these is for the markets that you trade. When this is published, just go to your chart, put a line in the sand at 37, put a line in the sand at 38.70, so that you can visually see, are we having a bullish session? Are we moving towards this number? Are we bearish? Are we moving towards this number? Maybe we're below this number. Okay. Historic price action for Concierge. The logic alerts, which are published in real time as opportunity presents itself, based on current price action. So let's go to a daily chart of the S&P 500 E-mini futures. We had a bullish cross, price pulled away, new all-time historic intraday high, new all-time historic closing high. Okay, and then when price could go no higher, the swing high was 39.7850. The reason that's the high is because no one in the market at that time was willing to pay 39.7875. You can get all kinds of complicated reasons why that was the high, but the bottom line is if one new guy trading one contract in a town you never heard of had accidentally hit the buy market button when price got to 78.50, then the high of the session, the all-time historic intraday high of the S&P 500 E-mini futures would be 39.7875. That kind of turns a lot of algorithms on their head. Math is based on logic, okay? But there's also the illogical out there in the world. I mean, with as many traders as there are in the marketplace at any given time, between retail traders and funds and professional traders and institutions and all of that, the fact that nobody accidentally, and you know what, for all we know, 78.50, that could have been a mistake. Maybe somebody did hit the buy button and they meant to hit the sell button, buy market instead of sell market. I mean, if you think about it, let me suggest, don't think about it too much. It just is, okay? So whatever reasons you hear for why this was the high, just know that that reason might even have meaning, okay? But also understand how easily it could be a different number. Okay, so we know that when price runs into resistance and can go no higher, for whatever reason, it will turn and go look for support. So it came down here to the 24% fib of the last leg up, caught a wee bit of a bounce, not a lot, and then came right on down to, on the Partners Workshop Thursday night, we laid out like 4 good reasons. Okay, we've got the 24% Fibonacci price extension, the 38% Fibonacci price retracement, we've got the BBC, and now we have also the low of Friday, and the low came in because of the 3 things I just mentioned. There's 4 things. This bullish cross right here, we know that's potential support. This 38, this 24, this BBC, that's like support times 4, or maybe even 5. Okay, so remember, the pullback holds more often than it doesn't. If we go over here, price pulls back and we get a bounce. Price pulls back, we get a leg and a retracement and a leg and a retracement and a leg. Okay, so we expected that pullback to hold until proven otherwise. Well, what would otherwise look like? Otherwise would look like price getting below this bullish cross down to about maybe 38.61, which would then open a window of opportunity down to the 50% fib retracement of just the last leg up. Now the entire move that started at the end of October to here, the 24% fib retracement, which is the shallowest fib retracement, okay, the 24 of the entire move up, is at 37.99. That's this line right here. Here's the 62% fib of just the last leg up. So if price takes out this low, this bullish cross, now last night I posted in the discussion group that initially the first thing to watch, I posted a chart, I said watch the high of Friday and the lower Friday. If either one of those is broken, then that's a good indication of where the market wants to go. So we took out Friday's high. In fact, I took over the mic for just a couple minutes this morning while Michael was on break, and we talked about this. And this high wasn't broken yet, I don't believe. I said if we break that, then the next resistance overhead will be, at the time, I think it was 39.29, the step line. Now it's risen up to about 39.31. Okay? All right, so we're at resistance. If buyers don't have enough commitment to get us through this resistance, then we'll turn and go look for support, which again would be at the BBC, low of the session. All these other things that I mentioned are still in place. If price can overcome the step line, blue and climbing is directly above price. Now, when blue and climbing is beside price, see how far price is over to the left of blue and climbing? That's very, very bullish. Pull back. But now, instead of blue and climbing being beside us, it's above us. One more daily candle, a sideways candle, it might take two, but when you see blue and climbing get above price like this, know that it's pretty close to doing this, turning into red and falling. Now over here, okay, we had price above, and it was on this candle here that we switched from blue and climbing to red and falling. Now this green line, the BBC, stands for bull bear cross. When price crosses below it, we're bearish, looking for lower prices. Price crosses above it, we're bullish, looking for higher prices. BBC, bull bear cross. Above it, we're only looking for long trades. Below it, we're only looking for short trades. Okay. Now, so we've identified the high of the session, 39.32, which is where the step line is. Okay, we know that is potential resistance. If we get above it, like say to 39.40, then our next resistance is up at 39.51. So there's a 10-point window of opportunity between the step line and blue and climbing. If we clear this area and I can see a pullback on a smaller time frame, then I'll put an alert out to cover this. If price can not only get through the step line, but if it can also get through blue and climbing, then we potentially go up to test the all-time historic intraday high at 78.5. The 38% fib price extension above that is at 39.88. So starting out your trading session with the daily chart is a good idea because you're able to identify. It doesn't matter if you start in the morning, afternoon, middle of the night. Go to your daily, and if you leave your charts running all the time, be sure to refresh it. Go to a 1 minute, then back to the daily. Okay, shake out any kinks you get in the BBC seems to kink up a little bit. But anyway, identify the major areas of support and resistance. Okay, we know we got major support down here, 38.92, and we're at major resistance. If we can overcome it, get up to 39.40, then there's a 10-point opportunity up to basically 39.50. We don't trade off the daily chart, but the high elevation look at the market tells us where we can expect to find good resistance and good support. So just as this morning in the room I identified this, we were still down here, I think, trying to take out the high of the day or the high of Friday, or it may have been just above it, but we clearly identified, and we weren't disappointed, It did what we thought it would do. Now, the question is, how committed are buyers? Are they committed enough to get us up to this next level? So, with all that, let's go to a 30-minute chart of the S&P. Well, let me show you this NQ daily. We talked about that a couple times last week. And let me refresh this one as well. So we had a bearish cross. We had this leg. Remember I said the pullback holds more often than it doesn't? There you go. So then we get a bearish cross. We get a leg and a retracement. It holds when it pulls up from the bottom as well. And then a leg. Then a retracement. And then we run up to this area where this bearish cross took place. We tried 1, 2, 3 sessions to get through it, couldn't do it. So back on Thursday, we closed below the BBC. We had 2 days closing above. Well, here's a day we closed above, below, above. That gives you pause right there. Above, below, above. That's a market consolidating, trying to sort itself out. So buyers tested the upside, got us up to the 62% reverse fib. Reverse fibs are done by going from the high to the low versus the low to the high. Okay. And so we've, from this high to this low, we've challenged the 62% reverse fib. We've challenged this area. Haven't really full-on tested it yet. This was Friday's candle. Okay. And so this pop back above today, does it have legs? Can it keep going? Can it take out this area? If so, then we have a nice window of opportunity up here. If it fails, then we'll work on this window of opportunity down here. Okay. So 30-minute S&P. Now these are last week's zones unless they're yellow and then they're a previous week's zone. And sometimes the zone will end up staying on my chart in yellow for a couple weeks because it continues to be an important price, important area. Our highest weekly zone this week in the S&P just so happens to be the exact same number as last week. Now, Globex opened last night. Right there. That red candle. The one I just put the line on top of, that was Friday. There's last night, 6 p.m. Eastern. Now the concierge trade alert number for the S&P is 3937. Just in time. Now we had logic alerts. But the CTA, this is forward guidance for the entire session. If we can get above 37 and hold that on a pullback, okay, then we'll have a nice window of opportunity to the upside. CTA 3937. It can be a gateway to higher prices, or it could become an iron curtain, which means price hits it, it becomes resistance, and sends price scurrying in the other direction. The short side was 3870, which we haven't touched. All in all, it's been a pretty quiet session. Note, when you have no trigger on the S&P, on the CTA, and we had logic alerts trigger. So everything between these two lines in the sand that you've just drawn. Remember, on the way up, remember what I said? Once I post it, and I posted it last night during the CTA static report was published during this candle. Okay? And so once price got above I mean, we can see a leg, a retracement, double bottom, a leg where we take out that high, a retracement, and then we start climbing. Okay, so this is what I meant by using the CTA. If we're above the BBC, then price is trying to get to the zone overhead, is trying to get to the CTA overhead, the long CTA. Okay, and so that's bullish, so you want to be looking for long trade setups, or if you're brand new, just trading the logic alerts as they come out. The idea is for you, when you get the alert, when your telephone, your iPad, your PC, your Mac makes the telegram sound, you don't have to fall all over yourself to go try to put a trade on. That's not the idea. The idea is that you go to your charts and study the alert, study the chart. Study the alert, study the chart. Figure out why that's a window of opportunity, because our goal here is to teach you how to find these windows of opportunity just like we do. Okay? We don't want you to be dependent upon us or anyone for the rest of your life to tell you when to get in, when to get out. We want you to be able to look at a chart and recognize when opportunity presents itself. And with our simple strategy and simple indicators, it's, well, simple. It's not easy. Trading's not easy, but it can be simple. Okay? And with nothing triggering on the S&P, that's my definition of pretty quiet. Even though we are up substantially on the day on the S&P, I'm not convinced on the upside till we get above the CTA number. And if we were dropping, the same would be said for this one. So we'll go to the Dow. Okay, the CTA number last night for the Dow. Let's see, the market opened right there, had a little bit of a gap lower open. I did not put out a gap filled trade either. So the long side was 32,690. Short side was 32,395. 32,395. Okay, so 33. 32. 32,395. All right. And so the initial drop took us to 370. So that's 25 points, $5 a point to $125 per contract traded. Important prices, important areas, almost always tested. So here comes round two. And this time we drop, well, actually we dropped here to 372. So 20 points, $5 a point, $100 per contract traded. Then back above the trigger for the third drop, and the third time it took us down to 328. So from 395 to 328, so the 60, I call it 60 points, $5 a point, $300 per contract traded. And alongside, still sitting here above that swing high. I'd like to see if we're going to rally to convince me, and I'm always asking the market to convince me. Our methodology does not tell the future, because that's not possible. We don't have crystal balls. Neither did Adam. God did not give Adam the ability to change the past or know the future. And those two things are inextricably linked. Now, a lot of trading websites would try to convince you that's not true, but it's in the book. It's true. What we can know, if we understand how price flows, using our simple strategy and indicators, we can know what the next high probability move is with certainty. About 20% of the time, the market does something other than the next logical thing. So we don't go back to the drawing board and try to curve fit so it would have caught that one. No. We simply know that that's how markets work. Price flows on a daily chart the same way it flows on a 1-minute chart, from support to resistance, back to support, back to resistance, back to support, back to resistance, again and again. It's a never-ending cycle, never stops. From the second the markets open on Sunday night till they close Friday afternoon, support to now people will tell you, well, that's horse and buggy. They were doing that back in 29. Well, some of us are still doing it. It doesn't matter how many indicators or oscillators or anything else you put on your chart. None of them can tell you the future with certainty. All we're looking for is just a window of opportunity. A place where we can enter the market with a small amount of risk based on the probability that price is going to travel to our target before it travels to our stop loss. And again, once you understand how price flows, once I teach you that, once I show you that a daily is no different than a 1 minute, if I brought up my daily chart and if I hid the part, if I just took a screenshot, well, I mean, like this. I could take a screenshot of just this, and you would have no idea if this was a daily chart, or I would probably have to keep pricing out of it here. I'm sure I'm talking about. That could be a 1 minute chart, that could be a monthly chart, that could be a weekly chart, it could be a daily chart, it could be any, because the markets are fractal in nature. Price flows the same on a daily chart as a 1 minute. Support to resistance, back to support, back to resistance. Now, the weekly trading zones provide you with fixed support and resistance for the entire week. The BBC, see, when price pulled up here, we expect that to be good resistance. Just like we expected it to be good resistance here, 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 and even here. Why do we expect that? Well, over the last 138 weeks now, you've been able to see it happen live in real time. So, it is what it is. Price gets above the BBC, pulls back, and what does it do? It holds. It sends us up to this next level from last week. Now our CTA number for today is still way up here. We triggered 1, 2, 3 times on the short side. No trigger on the long side yet. Okay. So next on my list is the Russell. Remember, the Russell was the one that was down big earlier when we went over the numbers from around the world. The open last night was right there. Had a little gap lower open on that one as well. Long side was 23.12, which never got touched. The short side was 22.61. From 22.61, we dropped to a previous weekly zone. Almost to it. This would have been 47.48. It looks like the low here was actually 50. It's an area. Fibs are in area, zones are in area. And so from 2261, we dropped to 2251.4, so 9 points, $450 per contract traded. And then price got back above the trigger, did it again, back to the trigger, did it again. This third one dropped about 10, 11 points. Just shy of 11 points. Call it 10. So you got a $500 or a, so from 52, 62, close 52, 61. So you call it 9. Just call them all 9. 27 points. 1, 2, 3. And it looks like it's about to do it again. Oh, and I didn't count this one. Although, on this one, see, on this trigger, see how the step line is directly below price and how it can serve as support? Look at the bottom of that body and the bottom of that body are both above the step line. Even though they spiked it, see how it's acting as support? And so, at this point, with these two gathering here, I would want to see price get below those, So 2253 down to 2251, down to whatever the next zone is for this week. I guess 2250/51 is a this week zone. 2250/51. So small window of opportunity there. Okie doke. Next on the list, crude oil. Uh-huh. 6205. We're in the K contract now. Okay, and the alert came out. That candle right there. Okay, so the long side for crude was 6205. The swing high 6204. So we came within one tick of triggering, but we didn't. Now what's the swing high? Swing high is 6204. And our alert was 6205. So yeah, we never triggered that one. Remember, it can act as an iron curtain or a gateway to the upside. Or same thing down here. Iron curtain turns price away, or the gate swings wide and we're off to the races. Short side 58.85. That hasn't been touched. No. This is a pretty quiet sideways Monday. Now, Stefan published this morning or yesterday that in our discussion group that there's a whole lot of Fed meetings going on this week. Not a big Fed announcement type thing, but he's speaking in different places, or different Feds are speaking. So how much that has contributed to anything that we're seeing in the markets today, your guess is as good as mine, I reckon. We don't know what's going to happen next. There's no way to know what's going to happen next. It defies the laws of God, science, physics. Yet, hear this, 9 out of 10 traders spend all of their time and treasure trying to know the future, trying indicator after oscillator, after guru, after crystal ball, to never get stopped out again. is not possible. The only way to not get stopped out is to not trade. Plain and simple. Yet hundreds of millions of dollars are spent every year. Millions of dollars by traders who, just want to make a living. And it's one blind alley after another, after another, after another. Okay? You got to get away from the magic tricks. The solution to solving the markets is not out there. It's inside of you and inside of the market. And the journey begins when you understand how price flows. It's really quite orderly when you think about it. If you've ever been to a live auction, these are auction style markets. You've got buyer on the bid, seller on the ask, price channeling back and forth. If you've ever been to a live auction, things can get pretty chaotic. Some people thrive on that kind of an environment. Some people don't. I don't really thrive on it. So more sideways. All right, next on the list, NQ. Okay, the NQ. Look what he got here. Bearish cross. Making for some resistance. Now, you can hover right where the lines crossed, right? But that's just a number. I want you to think of it as an area. Okay, we've hit the area. I know we had a long NQ trade going up here this morning. I don't know if that one's been recapped or not yet. I'll take a look at it. NQ, it was to be long 130.80. 130.80 to 130.90. That's $200. To 13123. Made it through there. And then the next target or potential resistance is 13237. That would be this zone from last week. So the swing high so far is 157, and the entry was 80, so 57, 67, so that's 77 points. Alexa, 77 times 20.
77 times 20 is $1,540.
$1,540 per contract traded. That's what this alert is worth so far. If you took it and if you're still in it. And this was issued with plenty of time because honestly, the entry was going to be 130.40, but price was moving so fast that I knew by the time I hit send, you would not have time to go to your chart and study it. So I had to think one more move out in time, sort of like that 3D chess. And I don't even play chess. I'm a checkers guy. The swing high so far, 237. No, I'm sorry. Swing high, 157. The next target is at 237. So after a breather, if we catch support here or here, this thing still has legs to the upside. Now, again, we're up against major resistance, right? And after that, this swing high. So that little doji right there. So we had a high at a zone, had a double top at a zone. We tried to reach up, make it a triple top, but there wasn't enough bullish momentum in the market to do it. So we ended up with a doji, which represents indecision. And then we closed well below BBC. And then we got bullish cross right here. If this is resistance, then this is support. Okay, and so price didn't really bounce off of it, but it consolidated just so happened this bullish cross was also at a weekly trading zone. So it consolidated there for a minute, and then a leg and a retracement, a leg and a retracement. And now the market starts to walk sideways. And we get an exit signal right there. So, had you been following this, and perhaps you saw, well, not because you're right on top of the zone. If you saw this little pullback as your opportunity, which is, I mean, that's exactly what Michael's teaching you every morning. So it entered there, which I'm guessing was a CTA. Must have been. So this drop 13,023 to 770. That's almost a $5,000 move if you take the time to do the math. Now, we also talked about transitions on Friday. So we've been leg, retrace, leg, retrace. And then remember on Friday I showed you this? I said, see how we're above and below and above and below? Because of the context, I said, I think this is a transition from a down leg to an up leg. And so far, that's still what it looks like. And resistance right on cue. Okay. Now, last night's open was right there. And the CTA on the long side was 12,983. $983. Alexa, 13,157 minus 12,983. I don't think she liked the way I did that. Okay. I'll resort to my handheld calculator. I don't do public math anymore. It's embarrassing. Alright, so we had a high at 13157 minus 12983. It's 174 points. At $20 a point, that's $3,400 per contract traded. That's what the market made available. All we did was give you a line in the sand. Now, this line in the sand, any accompanying logic alerts, and your understanding of what Michael teaches you every single morning, no reason in the world you could not have participated in this move. No reason at all. Alright, so that was the long side. The short side for the NQ was 12,780, which, if that was the open last night, no, that was not. That's Friday. Is that Friday? So that's the 18th. I need to find the 21st. Right there. That little candle right there. Okay, so that's the long side. The short side, 12,780, which is way down here. probably won't run into that today. So, the transition. Okay. All right, next on the list is crude. And we've already done these. 6205, 5885. Nothing happened. But I also talked about this doesn't have that same transition look to it, to be honest. Let me show you that NQ again. Is it? Yeah. Beauty's in the eye of the beholder. I got a feeling this one's just going to run into trouble. But we don't based on my feelings. We don't trade based on my feelings. I don't put out alerts based on my feelings. I put out alerts based on whatever the chart says. So we've pulled back to the BBC. We've got support. We know where resistance is overhead, the CTA number. If we can trade above 62.50, we could have a nice run. Maybe up to 63.75. Same zone last week and this week, looks like. Okay. All right, so GG, CJ, gold, sideways. And the opening candle last night was this big red one. Now some might ask, well, now, is that a bearish engulfing candle? It's definitely an outside day. Well, no, it's not an outside day, it's an outside candle. But it didn't have a lot of context. Now, the context was okay, because, I mean, you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles as part of an uptrend. It just didn't go very far. I mean, the low, the beginning of the move was like 1732. Yeah, maybe 14 points. Yeah, what you want to see is something a little steeper than that. Or this over an extremely, long period of time. But that is definitely an outside candle. This high is higher than the previous candle's high. This low, lower than the previous candle's low. And what does that tell us? That tells us to anticipate a potential reversal. And so we got a reversal, but not of great magnitude yet. But this could still all be the same move. Leg, retrace, leg, retrace, leg. Deeper retracement. I would be concerned on this move here, because you should have some potential resistance here. All right, so the numbers 1756 on the upside, never touched. 1735 on the downside, touched. Important prices, important areas. So from 1735, we put in a low 32, so it's $300 per contract traded. And then from 1735 just to the zone, that would be another $300 per contract, but it did go a little further. Not all triggers are created equal. So here we have red and falling. This one, you get below blue and climbing. So this would just have to be a judgment call on your part. I like to see red and falling like this. But the fact that there was so much room for this to close below and open, yeah. But here, okay, when we drop through the trigger here, we know we're going to run smack dab into blue and climbing, which represents potential support, and it has been. Price is traded above this swing high, so the next obstacle is this swing high. And if we can get through this swing high, then this swing high, and there's a zone from last week. Okay, silver, the last one. And the opening was right there. Okay, for silver short, 25.85. It's like we only triggered once though. Just kidding. So from 25.85 we dropped to 25.62. Like 23 points or something. Then we get back above the trigger and we drop from 25.85 to 25.45. So that's 40 cents. Okay, a $1 move, a 100-penny move is worth 5 grand. That's a 40-penny move. A 50-penny move is worth 2,500 bucks. A dollar move is worth 5 grand. A 50-cent move, a 50-cent move in the price per ounce, 2,500. And this is a 40-point move, 40-cent move, 40 pennies in price. And so then you see here we're shorting below the BBC. That's what we want to do. But over here, price is now opened and closed above the BBC. I don't want to short under those conditions. And as we would anticipate, when price hits blue and climbing, that represents support, and it walked price right back up to make that double top. Now we got a bullish cross. Question is can price push through that? That was the short side, 25.85. The long side's up at 26.58, which we obviously have not touched. And so that might put this in somewhat better context. All of the concierge trade alerts that we just walked through, one by one, you saw exactly what happened in each market. Those are based on historic price action. Okay. Think of it as a daily trading zone if you want to. We have our weekly zones, but you could think of the CTA as maybe a daily trading zone. So far this week, since the market opened last night at 6 p.m. Eastern, 16 alerts issued, 1 never triggered, 5 waiting, 10 actionable. We don't want to risk more than $300 per contract per trade, less when possible, using market structure and our very simple 3-step methodology. So that represents 10%, but that's not a typical week, because on a typical week we'll see 20%. Stop now. And now, our good word for the day. If you're ready to become a member of the family, go to eminifuturestrading.com. If you need help, call Valerie, 949-42-EMINI, or send an email to support@cfrn.net. This is a self-service window. You can just march right over here, eminifuturestrading.com. Get signed up. Once you sign up, Valerie will swing into action. She'll make sure you get all the invitations, all the links, help you with your charts, get you indicators indicating, whatever you need, so that you can be in the discussion group with us this afternoon and tonight. And when Globex opens tonight at 6 p.m. Eastern, that begins the Tuesday session. You can be there trading right along with us. Okay, we've spent 4 days talking about dealing with fear. Today is number 5. Psalm 27:1. The Lord is the strength of my life. Of whom shall I be afraid? An old adage says, fear makes the wolf bigger than he is. It exaggerates the problem, and as a result, you expend valuable energy in ways you shouldn't. For example, sometimes you avoid things that can't really harm you at all. Like the man who returned to his holiday cabin from a hike, badly scratched and bruised. What happened? His wife asked. I met a snake on the trail, he answered. Don't you remember? His wife responded. The park ranger told us yesterday that none of the snakes up here are poisonous. Her husband replied, they don't have to be poisonous if they can make you jump off a 7-meter cliff. Clearly the man's fear, not the snake, was the problem. I could argue both sides of that. Charles Spurgeon once said, anxiety does not empty tomorrow of its sorrows, but only empties today of its strength. That's good. Anxiety does not empty tomorrow of its sorrows. It only empties today of its strength. Well said, Charles Spurgeon. As long as you allow fear to take the wheel, you'll never go where God wants to take you, or discover and develop the talents He has placed within you. And here's the good news. God will help you to confront and conquer the fears that are controlling you right now. David, the giant slayer, the author of Psalms and Israel's beloved king, often found himself with his back to the wall. Writing about such an occasion in Psalm 38:22, he says, make haste to help me. Be pleased, O Lord, to deliver me. Psalm 40:13. But David knew who to turn to. The Lord is the strength of my life. Of whom shall I be afraid? When God is the source of your strength, you can face the worst fears and overcome them. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.